tariffs, and Bloomberg argues that this is a dramatic widening of his trade war. This time he's talking about 25% levies on vehicles, semiconductors and pharmaceuticals imported into the United States. Let's get more from Shiraz Ahmed, Senior Financial Advisor and Portfolio Manager at Raymond James. It's great to see you.
Thank you so much.
Whatever Trump does on tariffs, you feel that his actions, his threats will be a key determinant for markets, a key driver for the next while?
Absolutely. I mean, we've seen him dominating the headlines for the last several months, and it's something we likely will see that continuing in the not-too-distant future.
You broadly think, though, that Trump is a bullish factor for stock markets? I mean, they're near record highs.
Absolutely. And historically, if you look at his last presidency, it was the same deal then as well. I think regardless of what may happen from a lot of the global trade standpoint, he's likely going to be positive for U.S. markets.
Why is that?
Well, I think just generally, he's got a pro-business methodology, pro-business mentality. So he's trying to support U.S. businesses overall. And even if you look at if tariffs do come in, those are typically inflationary as well. And we could see the prices of all goods in the United States going up. And as a result, that could pose for profits for companies.
That's interesting. Yeah, they might have more pricing power. Yeah, I guess the other side of that coin is it would tend to keep interest rates high if inflation is high.
Unfortunately, yes. So that would be the other byproduct. So I don't envy being a central banker right now. They're in for a tough go.
A couple of names that you like the look of right now, and you're very quant, mathematically oriented. Walmart. What's your take on Walmart?
So Walmart is currently our highest conviction security that we own in our portfolio, at least in our North American equity strategy. And again, at Sartorial Wealth, we're more momentum or quantitative-based investors. So right now, it's our favorite position at the moment. We have about a one-year return of about 79% and a standard deviation of about 18%. And if you want to compare and contrast that with, let's say, NVIDIA, which has a one-year return of about 86%, but a standard deviation of 56. So that's nearly 3 times the risk for nominally more return. So while it may not be as sexy, but it still does, Walmart still does post pretty positive returns.
That's interesting. So a comparable return with NVIDIA over 1 year, but far less volatility.
Absolutely.
Is NVIDIA a stock that you favor?
It's one that we have owned, and we've been in and out of it several times over the past few years. But as of right now, it's got a very low weighting in the portfolio.
Okay. Yeah, I think we had a banner saying bullish on NVIDIA, but that's not quite correct. You're more cautious on NVIDIA right now.
At the moment, relative to, let's say, a Walmart, we're definitely more cautious.
Okay. Apologies to the viewers over that one. You are wary of energy, metals, and materials. Why is that?
Just generally speaking, they have scored low in our momentum algorithm that we made. It's a proprietary algorithm that took us 6 years to make. And as a result, they've just not fared very well. And as we can see right now with the geopolitical situation, most of the sectors have not been doing as well relative to some of the others.
So you're wary of, maybe you can put up copper over the past year or oil, aluminum. You're wary of the economic impact of these tariffs?
They could be, but as the way our momentum model really works is looking at the price movement. So if you use sports as an analogy, we're trying to find who's on fire, and we want to keep giving that person the ball. And right now, materials, energy, they're not on fire relative to, let's say, a Walmart.
Let's have a look at oil. It did rise a little bit today on supply threats, but sure enough, it's down 8% in the past year.
Absolutely. So that's the reason why we follow those momentum-based models is basically we're human, we can make mistakes. So part of it is to put some checks and balances even on ourselves.
I'm not sure, have you spent much time on the Canadian dollar? What would your view be there if you have one?
Not so much. So we're not really currency speculators in our practice, but it is something that we're obviously watching, given that we are in Canada. And as a cross-border advisor, we tend to deal in a lot of both countries' currencies, but that's not an area that we tend to specialize in.
Oh, do you have clients south of the border?
Absolutely, lots of them.
I see. Wow. What, are you getting any feedback from them? Are they asking, should I dump my Canadian stocks?
There's definitely concerns about what's going on right now. It's more about the temperature check. I was literally just in Florida last week, and that was really the conversation that we were having. What is the temperature check of Canadians with regards to the rhetoric south of the border?
How frustrated are Canadians?
Absolutely.
And what did you tell them?
Generally speaking, I'd say most Canadians are not thrilled with what's going on right now, to varying levels of concern, but I'd say that's probably pretty accurate.
Okay. Broadly, let's put up a 5-year for the S&P 500. Of course, it got to a record high yesterday. It has come under pressure today. Would you be a buyer of the broad market, or what is your approach? Do you ever just index?
So we don't do a lot of direct indexing. So we take our model methodology, at least in our North American equity strategy, takes constituents from pretty much all sectors. And we do narrow that down into a small universe. And then from that, we try to have representation from each individual sector, but it will narrow it down to a handful of securities that we may actually participate in. So we don't do a whole lot of broad indexing, but we do try to narrow in within who are the ones that are moving and shaking in that specific sector.
Let's put up the NASDAQ 100, maybe a 5-year chart, as a proxy for the Mag 7, because, of course, they would dominate that blue chip index. Do you think the big U.S. tech stocks have momentum right now?
They still do have momentum, and I think the charts are reflecting that right now. Generally speaking, we'll be participating for as long as we can in them, but the way that our model tends to work is that when things start to get a little exuberant, it does typically start trimming. So it's not so much me that's saying that we think that it's going to cool off. It's more that the data starts to support that.
Shiraz, thank you very much.